Hey friends, Lucian here with the Bullish Bears team. I wanted to make this video on the bullish engulfing pattern. So, the bullish engulfing pattern is a chart pattern that forms when a small black candle or red, depending on what your chart is followed by a large white candlestick or a green one that completely eclipses or engulfs the previous day's candlestick. The shadows or tails of the small candlestick are short, which enables the body of the large candlestick to cover the entire candlestick from the previous day. So that's ideally what it would look like, right? So, if price is in a downtrend, it shows that maybe that the bulls are starting to take control for a potential reversal. So this pattern is not, again, I'm going to show you some really good looking ones and then some ones that are not so perfect because it's the real world of trading, not what's just perfect all the time. Because as we all know, in the real world of trading, nothing's ever perfect. Things change all the time. So here's a chart of Goldman Sachs, right? So you can see price was moving up. Bears kind of got in control, pushed price down to the moving average lines. Obviously, moving average lines are support. And here you go. Here's a really perfect looking bullish engulfing candle. You can see that smaller looking bearish candle, and the wicks and shadows are within this bigger green candle. What did that do? Showed a potential reversal, which happened. This is a perfect looking pattern of like, wow, okay, that's perfect. Covered right at the moving average lines, engulfed it to continue upwards. That's a really perfect looking pattern. But again, the real world, trading, not everything is so perfect. But this is very important story to tell. Flagpole up, here comes the flag down, right to a moving average line, bullish engulfing, perfection. This is the perfect bullish engulfing pattern. That would just be an ideal perfect scenario. All right, let's look at Netflix here. If you go back here. So right here, another really good looking one here. Now the candlestick is a little bit bigger on the red one, but as you can see, price is up. Price started to fade. Red candlestick. Let me see if I can move in here a little bit more. There we go. So as you can see, this red candlestick is within this big green one. So this big green candlestick, what happened, no coincidence, right around this 50 SMA, moving average line is very important. Price is falling. It was heading down right at the 50 SMA. Big green bullish engulfing candlestick came in and prevented price from falling, got back up above the moving average lines, and it continued. So that's a really nice looking one as well. This one, it's not totally in the center, but again, price was falling. You see this red candlestick, this big green one came in. Now here, take a look at this one. This is falling, big green candlestick came in to stop it, engulfed it, right? But what did it do? Price still fell after that. So it didn't, this bullish engulfing didn't work the same way as this one. But you got to keep an eye on what was happening. The moving average lines were still bullish over here. They were bearish over here. So it was a little bit easier when price kind of closed above here for price to continue upwards. Whereas down here, moving average lines were bearish. Price tried to get above, but couldn't. And then obviously you see it just failed the moving average. All right, let's take a look at FCX. Price is moving up here, consolidation. Price started to fall. Look at this candle right here. Now it has a little bit higher wicks and shadows. However, this big green candlestick did still engulf it. And as you can see, moving average lines were still bearish, tried to stop it. And you can see kind of some consolidation still fell a little bit further here, pretty volatile, but then it started to reverse. But again, with candlesticks, remember, there's candlesticks smaller patterns like this, right? And then you got to look at the big overall picture, and then you got to put it together with moving average lines. So it's not just, oh, candlesticks, this is what it does. You see a bullish engulfing pattern, so that means price is going to reverse. Nope, not so fast. You got to look at the big overall picture as to what is happening. All right, let's take a look at AIG. Big downtrend, bear flagging down here, right? And then you can see right at the bottom. Now, it's not a very small red candlestick, but you can see this big green one engulfed it, tried to create a reversal, right, to stop it from falling. Price did move back up, tapped off the moving average lines, came back down again before it went up. But again, this is the bulls basically trying to come in and say, hey, let's stop this. No coincidence. Look, RSI very oversold. Buyers came back in and said, okay, hey, where the bulls are trying to take back control again, which they did, right? And then it started to continue upwards. So again, patterns, be very aware in relation as to what's happening in the big overall pattern. Look at the other indicators, watch price, look at moving average lines, and see what's happening in the bigger picture. Again, not a real perfect example here, but CLX. Take a look at this. There's some consolidation. You have the smaller red candle. It is being engulfed, but it's kind of towards the base of this green candle. But look at it, very important. Right around the moving average lines, price is starting to fail this 9 moving average. Big green candle came in, covered it, engulfed it, and then price started getting back above the moving average lines. And then look what happened. 920 crossover, that's a bullish sign. And then price continued forward. So again, it's not always going to be perfect, these patterns. All right, let's take a really good look at one with HP. Really great textbook looking bullish engulfing pattern. As you can see here, price is falling. Look at that small little candle, red candle, big green engulfing candle. And as you can see, price is starting to potentially reverse. This is a really nice looking bullish engulfing. That's a really perfect one as well. So again, I try to show you some real world patterns, some that look really good, some that are like, okay, what is this exactly? But I want to show you, basically, again, in the real world, trading is not perfect. You have to look at the big overall picture when trading, put together these candlesticks into smaller patterns, then within the bigger patterns, look at moving average lines, other technical indicators to see the big story. And these patterns really they help with risk management. Traders pay attention to patterns. Patterns are the name of the game. These candlesticks, when trading, they tell a very powerful story of support and resistance levels. If you're not a member of our community yet on Facebook, make sure to come and join us. We are the Bullish Bears. You will see we call ourselves the stock market community up here just to differentiate ourselves from our fan page. So make sure you like and follow our fan page to stay in touch with us. Also, too, if you join our community, you'll notice that we keep all the spammers, all the trolls, and all the stock pumpers out. So it's a really good, clean Facebook group. We run a tight ship over there. So if you want to talk to other traders around the world in a really good, safe place, make sure to come and join us. If you have not been over to our website yet, head over to bullishbears.com. The link will be below. You'll see that we offer a lot to our community members. We have several different trade rooms. We have a day trade room, a swing trade room, a futures trade room. Our trade rooms are open 24/7. So if you're working, you could always go back and look at the chat throughout the day. Again, talk to other traders, anytime, day or night. So not only do we have our Facebook group for a community, we also have all of our trade rooms as well to really help you with support when you're getting started with trading. Each night we do send out watch list and trade alerts. We are not stock pumpers. We do not call out entries and exits. We help to teach you to become your own trader. So each night we send out our trade alerts with key breakout and breakdown areas with notes to really help you to make your own trading decisions and not rely upon us. And if you want to become a successful trader, that is super important. You don't want to be following stock pumpers. You want to be able to make your own entries and your own exits. So read about how our trade alerts work over here. If you're new, again, we have several $1,000s worth of free courses over here. Make sure to take them. Give yourself a few months to get comfortable with trading. You're not going to make money overnight. It takes time to become a successful trader. So take our free courses and really get comfortable with trading. So if you're not a member yet, you can come up over here and click subscribe. Also, too, before you leave and become a member, make sure to please, if you like this video, like it, share it, comment on it, and subscribe to our channel.
So we hope this video helped you, and we'll see you in our community. Enjoy.